In this video you will learn about using the intra-exchange arbitration deal screener Arby.Trade. First, let's talk about intra-exchange arbitration itself. Unlike inter-exchange arbitration, where you take profit from buying assets at one exchange, transferring them to another and selling them there for more, intra-exchange arbitration confines deals to one exchange. It works by making a sequence of 3, 4 or 5 deals on the same exchange, swapping 3, 4 or 5 cryptocurrencies progressively and finally coming back to the initial asset. With 3 cryptocurrencies it would look like this. Use coin A to buy coin B, use B to get C, then sell C for A. The screener follows all asset quotations at all connected exchanges in real time and computes all deal chains that might end up making money. How the screener works? The screener is located on the User Profile menu on the Intra-exchange Arbitration tab. First and foremost, let's start with the deals table itself. All deals here are grouped by exchange. Inside an exchange, deals are grouped by chain length, and inside chain length by profit amount top to bottom. The pairs column show cryptocurrency pairs for exchanging. The profit column shows the revenue from completing the course of deals. Bid and ask tell current buying and selling prices at the exchange, with target trades in color. Volume presents the deal volume maximum. Let us take up the example of the first deals chain in the table. We start by spending Bitcoin to purchase Ethereum at the stated rate. Step 2 is spending Ethereum to get BitTorrent. Finally, we sell BitTorrent for Bitcoin. The result is plus 1.69% to our initial amount of Bitcoin. Next, we repeat this deal several times, as long as the deal stays in the table, each time adding a designated percentage of profit to invested funds. Because all of these deals take place inside the same exchange, such small rate differences do not produce large profit margins on one course of deals, and the chains themselves waste away sooner than opportunities in inter-exchange trading. But since in this case there is no need to send coins between exchanges, there is no waiting time, and thus no danger of missing out on the right selling price. Most important, more deals can be concluded in an hour or day. Other table functions. Opposite every deal there is an arrow up button, which will keep a deal of interest on top of the group, to avoid losing sight of it after table data are refreshed. All of the exchanges connected to the screener are listed above. Beneath every exchange's name there is an on-off switch that can filter it out. This lets you customize the table and keep only exchanges of interest in the listing, making its perusal easier. All are on by default. A couple of tips. First, avoid making deals at maximum allowed volume but stay a little smaller than the exchange allows. Second, the shorter the chain, the faster it falls apart, but the more profitable it is. Longer chains also stay around longer, but bring less revenue. Keep that in mind. Give it a try. The system is simple, but it takes a little exactitude and patience. Try different chains, start from small amounts, and when you have practiced enough to do it without thinking, you will get an idea about which exchanges and chains work better for you. Like inter-exchange arbitration, intra-exchange is practically risk-free. Rather than depend on a forecast coming true and wait for the market to go in one direction or the other, you can make money quietly and hassle-free, with the option of getting rid of a purchased asset without any loss if something goes amiss. Good luck and happy trading!